What's up, y'all? Welcome to another video. Welcome to my channel where I talk about how to invest using the psychology of the markets. What does that even mean, right? You know, a lot of people when they trade the markets, specifically the stock market. I'm gonna stick with the stock market here. When they trade the stock market, they think of it investing and trading where a specific strategy using technical analysis or some sort of indicators, right, on a chart, like that will give them the edge. Here to tell you, no, it will help. It'll help. Okay, maybe. But more importantly, if you can develop your intuition in how the market is thinking and acting emotionally, because it acts on emotion. And if you can develop an intuition, which your intuition is not going to be right 100% of the time either. So there's no sure way of how to game these markets, right? That's why they exist, and that's why they're so efficient, right? Because of this, no one's able to cheat. You can't cheat the market, right? I mean, unless you're insider trading or something, you get some information where not everybody else is able to get, then, but that's something else. But specifically, if you can develop an intuition of how people think in the markets, you can develop an edge, right? And the variable that you can control on this edge is time. So time would be your greatest asset. If you can have time work in your favor, that's your greatest asset. Now I want to tie that into options, right? Just real quick on a side tangent here before I start the video. When you think of time working in your favor and you're buying options, you're really just having time work against you. You're telling time that you don't want it to work for you. You don't care about it. And I'm here to tell you that 99% of the people that trade options, short-term options especially, they lose, right? A lot of them blow up their accounts, right? They think the market's a scam. They say this doesn't work, right? Whatever, right? They just get out of the markets, right? And most people never come back, and it's a shame because they weren't taught right from the beginning on how to trade the markets, how to use these tools, right? That the markets are giving every participant the opportunity to use, right? Because there's a right way to use options. You have to use it in a form that allows you to have time work in your favor. Time is everything in the markets. So back to so this channel is about how to use the psychology of the markets to invest, right? So what I want to touch on here is, in this video, is how people think when they first start investing. Especially if you're active on social media, especially Twitter, where you see people posting their huge gains, right? Huge losses, right? And or they're posting large percentage gains, especially in the crypto space. It's very prevalent and very common to see, people in crypto especially showing percentage gains, right? And a lot of people, flock towards that, and they're very mesmerized by that because they see that and they're like, wow, that guy made a 400% trade on Bitcoin, even though Bitcoin moved about $1,000. Well, we'll say $4,000. Bitcoin's at 40K. It moved $4,000. That's 10%. How did that guy make 400% on his trade when Bitcoin only moved 10%? And he was trading Bitcoin, or she. They were trading Bitcoin, right? They use leverage, right? And 99.9% of the people that trade that and show the percentage gain, right? And they're like hounding and really flaunting their gains, right? They just show the percentage. They won't show the amount that was traded. They could trade $1. They could trade $1 and show 400% gains. Now, when people think of investing, a lot of people focus on percentage gains, right? Well, that's not going to be, it ain't going to give you the cash that you want, right? To really grow your wealth, right? I mean, because if you're so focused on percentage gains, then you're looking at it wrong. And the reason being is because, first of all, in order to get those percentage gains, say I'm talking about like 50%, 100% gains, right? Like that's what people are like excited about, right? And they look at it that way, and it's wrong because it gives them that gambler mentality, because you have to have that gambler mentality to get those 100% gains. You have to take a shit ton of risk to have those gains. Now, what's the problem with that? Well, the problem is that in order to take that type of risk, you can't play very large. If you want a 400% gain like that Bitcoin trader is getting, you can't put in a 100K into that trade if all you have in your account is 100K. You see what I'm saying? So, would you put 100K into that trade? Whereas in the fact that the risk there, saying that specifically that Bitcoin trade, that risk there is that there's a price, there's a liquidation price. And if Bitcoin goes against your position and hits that liquidation price, the platform will close your position for you and liquidate you. You'll be at zero. It will take all your money, and even if Bitcoin goes back up and more, you're already out of the position. That's the risk. Now, I don't know why people trade leverage on crypto in the beginning, because it's leveraged enough. There's a lot of volatility. You can make a lot of money just spot trading, right? That means not using leverage. Please don't use leverage with crypto. It's stupid. It's just dumb, right? Anyways, so people are just attracted to that, right? And naturally so, right? Like when I started trading penny stocks, and the lure there was the percentage gains, because I was like, man, I'm not gonna trade this fucking Apple or this Google, right? I don't want to make 5% or 10% in like whatever in the trade. I want to make 100% gains. So I was trading penny stocks. So I have experience in that, where I had a little bit of money and I wanted to turn it into a lot of money. And that's the way a lot of people think. And it's natural. I think it's just part of the game when you first get into it. Either you're attracted by it because a friend of yours is showing you their crazy gains, right? And you're like, well, shit, let me get up in this, right? And that's how usually people get into trading or investing in the markets, right? Unless you have a mentor or somebody that is in those markets and they can guide you and show you how to properly start and build wealth. Other than that, it's usually a homie, or a family member. They're telling you, wow, look at these gains, right? And you jump in and you're expecting to make the same. So you're expecting to turn like $1,000, $10,000 into like 100K, right? In a shorter period of time. Nothing wrong with that. If that gets you into the market, cool. But don't let it be with money that you can't afford to lose, right? That's where it becomes a problem. So, in the beginning, everybody wants those high percentage gains. Now, it's okay to strive for them, right? But you got to do it so responsibly. You got to do so with a small portion of your portfolio, right? If you have 10 grand, and if you want to take a risky trade and try to shoot for that 100% move in like options, right? You want to trade, you want to try it out, you want to learn, and honestly, that's the best way to learn is experience, right? Just go and do it, but do it with such a small amount of money, and know that you have a high chance of losing. So you want to take a small percentage, like I'm talking about less than, say like 0.5%, right? Or even not, I wouldn't even say 1% on each trade, right? Such a small percentage just to feel it out, right? Buy one contract and just play, right? Use it. If one contract is too much, if it hits 1% of your portfolio, do a debit spread. I know debit spreads aren't very attractive, but they help you finance the trade, and you can get into some like plays like Tesla or like bigger stocks with options, right? Using debit spreads. So just want to get that out there. But as you start building, and as you're doing this, as you're feeling out the market and seeing how options and how like playing risky plays, how it comes out over time, like especially if you do it for like a few months, 6 months, a year, you're gonna realize, wow, I lose more than I win. It's just the statistics just play out, right? Unless you're like super lucky, which is very far and few between. So don't expect that. But if it happens, cool. But anyways, you gotta as you start collecting this data and start understanding that, man, I gotta take so much risk, I gotta lose so much in order to hopefully win every once in a while. So what you want to do, build that up. As you're doing that, keep maybe create a separate account. Create a separate like long-term account, right? That way it doesn't interfere with your options gambling, right? Or crypto gambling, whatever. With crypto, create a long-term crypto account, right? Like create a long-term, if you're gonna have a long-term account, keep it completely separate and something that you don't have to look at every day. And start investing, right? And start deposit money on a regular basis. Just throw it in there every month, every week, right? I know I keep saying this every video, but it's very important. You want to build up that war chest, right? And just keep depositing the money in there. And then if you don't want to be active in it, you could just hold on. It's a cop. So if you don't want to do that, if you don't want to manage it and trade it, right, just use M1 Finance. It's very good. I got a link in the description below if you want to use it. I don't know if I get anything for it, but I love that app because it's my super long term that I don't even touch. I barely look at it. I deposit money in it every week. It does it automatically. Takes that money and invests it between stocks that you choose, that you pick. You pick a set of stocks or ETFs, and it auto deposits and takes that money and spreads it around. It's actually very cool. But anyways, you want to build up that long-term account. You want to deposit money, no matter how much it is. I don't care if it's $5, $10, whatever it is. Any extra cash that you have, deposit in there and start building that account, right? And eventually, when you get to a point when you're invested enough and you have enough money, you got to think of yourself as a stock, right? Think of yourself as a stock, like a growth stock. When you're in the early stages of investing, your account's so volatile. You're very risky, right? You're lots of ups and downs, right? You could go up 50% in a day, down 50% in a day, right? And it's crazy, right? Like you're just like, man, but you're only playing with a small amount of money. Your account is very small, like just like growth stocks. They start out very, very small and volatile. But as you grow, as you grow your wealth and create this large account, and as you start making money, right, as your investments grow and you're in profit, right, and they start growing and you start going into 5 figures, 6 figures, even 7 figures, then you start thinking you got to change that mindset. You got to mature as an investor. You go from a volatile growth stock, right? You're no longer volatile growth stock. You've been in the game too long by then. You got to mature. You turn into more of a blue chip stock, right? Where you don't have huge swings every day, right? You don't have huge swings every day in your account. 5%, 2%. The smaller the percentage swings that you have, right, correlates to the size of your account. Now, when your account gets large enough, a 1 to 2% move in a day can be nice, very nice, right? You could make 4 figures, right, in a day, 5 figures in a day on a 1 to 2% move, right? 5% move, right? It's like, wow. But you're making all this money on a small percentage, but you're invested in reputable companies. You're not trading options. You own stock, right? Or you're selling option premium, right? Where it's not risky, and then you could play some risky shit, right? With a very small percentage, but that small percentage could be a big chunk of money, depending on the size of your portfolio, right? But just think of it as a game, right? And as you level up, you start out as a volatile little gross piece of shit stock, right? That nobody cares about, and you really don't care about either. You just want to see if you can flip it to make huge money. And then as you grow and develop and mature and gain experience and learn how markets work and understand, consistency is key. Consistency is the key. And that's it, and then you turn into this blue chip stock, right? And that's how you grow. That's it, man. So that's all I got to say about this video. It's going a little long, so if you have any questions, drop them in the description below. You can follow me on Twitter. It's in my, you can follow, it should be in my description or in my About Me page on YouTube here. Use the M1 Finance if you want a long-term account, and tell me what you want to hear about. I've got a lot of experience in the market, so I can talk about things. So just leave some ideas. Thanks, and I'll talk about them. See ya.